I got this little thing that goes up that says So on NQ, we're taking out the London low right now. So all that's left up there is the Asian high, but the London high has already been taken, and we're going down into the London low. See what this daily is looking like. Okay. I think I'm gonna start looking for longs. If we could get this candle to close above this fair value gap and then tap back in, I'm gonna start looking for longs. All right, so kind of just giving you guys a breakdown of why I got into this trade. You see, we had this London low right here. We had price come down, sweep it, and then we had an aggressive push back into the range. We inverted this fair value gap. Usually I will wait for this fair value gap to get tapped, but since this is such a big fair value gap and created multiple, we might not make it all the way back. So I just went ahead and got in a little early, and then yeah, we'll just ride this out. I have a wider stop loss just because I'm not sure how far back it's going to pull, but we're in the trade. Yeah, so like I was mentioning, y'all, the reason we're in this trade right now, we came down, we swept the London low, and then this is the sweep of the London low. Then we got an aggressive push back into the range, and we inverted this fair value gap. This would be an entry right here. It's tapping back into that fair value gap. I got in early. I could possibly add. I might if we get more of an aggressive push. I'm on MNQ right now, so just the micro version of NQ of NASDAQ. Okay, I added to that. I shouldn't have, just because I'm not gonna be able to get too much. I can only make like 1,800 in this. I was just saying I can't make too much in this one because my account, I forgot to link my accounts. So this is, yeah, so it's a combine, yeah. But yeah, Max, this is NQ. Well, I'm just saying, the my TP would have been like 3,000 or something because I have like 10 micros on right now, and I can only make like 1,800. No, it's a 15. I made 18 in it um, yesterday. Remember the trade I told you guys I made after lunch? That was like day one of that one. Yeah, this is a combine, not like, yeah, yeah. Because you said I'm up like that, like I was close to the 50,000. Not like that. Okay, now that we're in this trade, I want to make sure that we're respecting this bullish fair value gap that was traded because we already came back and tapped into the inverted fair value gap. Now this should be our focus. We want to see how price is handling inside this bullish fair value gap. So you see, we wick out of it, but bodies are respecting it, and that's what we want to see. Bodies are also respecting the inverted fair value gap, and the bodies are respecting the fair value gap in the direction. We got a wick out of it, which is cool. It's like another sweep before it wants to go in its direction. That's what we got there. So now we want to see it come take the high side. So we would want to see it come take the Asian high at least. But like I said, I can only make the 1,800 in this account, so my TP is right here at 21,500. But with this setup, we took the London low, we took the Asian low, and then the London high was already taken during the pre-market. It already got tapped into up there. So I would like to see it go up and take the Asian high. That's why we're in this trade. Okay, yeah, the S&P and Nas pretty much move the same. So you can look at that. Look at S&P and Nas, yeah. Okay, we're getting some movement to the top now. We just gotta keep it strong though. We don't want to see too much rejection. We really want to see like full candle closes, and we want to engulf previous candles. We want to make bigger candles than the previous candles. So this is what I don't want to see. Like I don't want to see this red candle, this 5 minute candle turning bearish like this, and we're leaving a wick up at the top, which is kind of telling me this isn't the trade we need to be in. Yeah, so this is why I don't like adding to my trades either, because you just end up messing yourself up. Yeah. But it's not over yet. And I gotta remember this is NQ. NQ likes to do all types of trickery. Yeah, you can definitely use the retracement to get in. So the pricing is a little bit, when you say 59.15, my prices are different because I'm trading futures. That's the thing about them. Like the pricing is gonna be different, but the structure still plays out about the same. So um but yeah, if you're playing if you understand that it is just a retracement, then yeah, rock with it. You just have to manage your risk properly to understand that. Yeah, it looks like I'm gonna probably get stopped out, but hey, it is what it is. It's part of the game. I had the analysis, like I read it. That's what I saw. So if we get stopped out, we just understand that it was a good trade and it just didn't work out in our favor. We followed our plan. On to the next one. Should I have added so much? No. So that's a hefty chunk, but you know, it's part of the game. I'm still learning when it comes to that. And then as we're speaking, we get some bullish energy and we're looking good again. So if it can continue, like I said, every time we get pushes, I want to see a continued push. I don't want to see rejection. I want to see a strong trend. Yeah, but it kind of looks like we're getting a rejection again. So yeah, we'll just have to, we're either going to get stopped out or it's going to go in our favor. We'll just have to wait through this. All right, we're starting to look good again. We did kind of come down pretty close to that stop loss, but again, that's why the stop loss is there. You gotta just put your trade in and just let it sit there. And if you get taken out, you get taken out. And you have to stick to your bias too. Sometimes price action will try and trick you, but you know, once you start reading the markets, your bias is what's going to hold everything together. And it still could turn around, but I mean, you see, we came down there and we're starting to get some pushback up. So let's see if we can get some continued energy up to the Asian high. But probably just to where I have my TP, that's where I would get out at the 21,500 if we make it back up there. And I know y'all are looking at this stop like that is an expensive stop. I got in prematurely and then bought more. So my average is a little messed up, but I did believe in the trade, so I just took it and just put my stop down here. If we would have gotten taken out, we would have got taken out. And my TP is only at 1800 just because I forgot to connect my accounts. So this is just a combine and I can only make 1800 if I just want to pass it today. So, and I mean, that's probably the smartest thing to do. So I'm just going to see if I could get the 1800 today with you guys. So if we get it, I'll pass it live with you guys. So remember that. Okay, for ES, the Asian market is still, the Asian high is still intact. That's what this is up here. So this is, yeah, Asian high. So that's what I would be targeting in ES. Like, cause you see right here, we swept these like short-term lows. Oh, let me turn this off. We swept these short-term lows right here. That's what you're seeing. Well, let me just use one of these. We swept these short-term lows. That's this wick that you see coming down. And this was like the London low and is lower than the Asian low. So Asian and London was swept in this move right here. Right. And then if we go down to the 1 minute, if we look at this 1 minute chart right here, we swept down into that low and then we had an aggressive pushback. When we swept down, we created a fair value gap. And then we disrespected that fair value gap. Then price came back again and tested it. Like in that video I was mentioning, came back and tested it. We dug a little bit deeper, but we still respected the entire fair value gap of the bullish one. So that lets us know that, you know, the trend is still strong. We had a couple wicks come through, but the bodies of the candle down at the bottom respected the fair value gap. And you see at the top end where we broke through. So we should get our continued push up. But yeah, so you still have the Asia high for S&P. And just remember the prices, the exact pricing on what you see on my charts and your charts are going to be different because this is futures. The Forex version or the regular indices version, the pricing is a little bit different, but the structure is still the same. So everything I showed you, you should still see on your chart, but the pricing of where it exactly happened is just a little different. That right there. Yeah, this is what I don't like to see though. This type of rejection, these strong selling candles. All right, y'all. It's not looking too good. We still gonna hold on to this and see what's gonna happen, but at this point, it's not looking good. We either gonna get stopped out or it's just gonna go in our direction. But we're just failing to create any energy going up. We keep pushing back down within to the bottom end of the range. But as you can see, we're kind of like um, we're not making any new lows either. Like we created this high, we didn't sweep that high. We created these lows, we didn't sweep the lows. So it's like wedging, or some people will call it like a flag, some type of flag or something. I don't know. I don't really follow that, so I don't know which flag it is, but we'll see what happens. Like I said, we either gonna get stopped out or it's gonna go in our favor. But one thing that I can say that is, something that I'm looking at. One thing that kind of keeps me a little confident is that we're treating this London, the old London low, as support. So if we can continue to do that, like it still kind of tells me that it does want to go a little bit higher. It doesn't want to go below the London low. Like price doesn't want to go back under there. But we gotta wait and see. All right, once again, we're getting some bullish energy, but we got to keep it up. I want to see it wick out like this previous 15-minute candle. Like I want to see some strong candles. All right, but we need to keep it up though. We don't want to shoot up and then shoot back down like this. Like we want to keep strong energy pushing in the direction that we want to go. So we know that the market made up his mind. So we're back into the Asian range from pre-market. Thank you for telling me that. I didn't realize I was muted. But this fair value gap that I put right here, I want to see if it's gonna get disrespected. That's what I was saying. That's gonna give me confirmation that we're still continuing into our intended direction. Right now, we kind of tapped into it and kind of pushed back, which is cool. We always expect pullbacks, but we don't want to see this 5-minute candle like engulf this 5-minute candle. Like it could pull back maybe at max like 50% of the candle, but anything past that, we probably don't want to be in it. But you can see we got a strong push now outside of this range, and we just need to hold outside the range that was forming for like almost an hour. So we just need to hold strong up here and start creating some structure above it, and then I think we're good to go. I like the way this is looking already, but I just don't want to see any type of rejection, or I don't want to see this 15-minute candle turn into like half of it turn into a wick like this previous one. I want us to stay strong like this. So I like the way this is looking on this 1 minute right here. You see how this green candle that's forming is engulfing these previous candles. Like we want to just see that energy through it. So it's showing us that it has a willingness to go higher, and that's what we want to see. And now the next task for it to do, like I said, is to close outside of this fair value gap. Once you see a closure outside of it, you probably see another candle that's going to come and tap back into it again to make sure that it does want to go higher. And then we should start seeing another move up. Okay, that 15-minute candle, we closed pretty strong. So we just want to make sure, again, just like I was mentioning on the 5-minute, we don't want to see this next 15-minute candle engulf this whole candle. Maybe it could come back maybe 50% to the Asia low and maybe retest that area. But we don't want to really see it go too much past that. Might see some wicks down there, but we don't want to see bodies closing down there. So we didn't close outside this fair value gap, but we did close above the 50%. So it just kind of, that's an, for me, it's just kind of telling me it might be having a little bit of trouble getting through there. But with it closing above the 50%, I still look at it the same way. So like the bottom, middle, and the top part of a, someone's crawling on me, but the bottom, middle, and top part of fair value gaps is like, you can look at those as like liquidity areas. So it's like, we sweep the 50%, we come back to make sure, and then we want to see higher pricing. But I don't like seeing this type of rejection from a fair value gap. But we in here, man. We gonna see what happens. And then even you also have to keep in mind too. So like fair value gaps, we created a 5-minute fair value gap that's going in our direction. So price could come back into this area right here. So that's why I keep saying also, like, I can expect it to come into the Asia low when we're looking at the 15-minute. Because on the 5-minute, we do have this fair value gap that's formed right here. So price could come tap into that, and then we get a continued push up. But we're already outside of this range that the range that we've been having this morning. So that's good. We had candles closed outside of the range. That's good. We're just battling with this area right here, which is normal. So like I said, maybe we see like a more of a deeper pullback into this and then a continued push up, or we just go from here. But either way, I still think we're sitting nice. I still think we're on the right side of this trade for right now. And I think we should at least get to our TP. And overall, like I was saying, I was expecting it to go to the Asia high. We're getting into the last 10 seconds of this 1-minute candle. We'll probably see like a push up, and it'll hopefully close up here now. And the next candle is going to tap back into here, and then we should see higher prices after. Yeah, we should see this candle push up soon and just leave a wick in this area and get that move up. Just like that. That's how we want to low key see that this candle end like that, like it's gonna have a wick and then the body outside. But it might not, it doesn't have to be this candle also. It could be the next candle, but we should have our push up after this, hopefully. We'll see. Or not. That's what I would have liked to see that. But now we got to keep in mind, now we might be seeing some reversal because we are, that candle inverted that candle, but we wait till candle closes though, right? We wait till the time runs out of each candle to like make that decision. But if that candle closed all the way down here, like in my head, that trend is over. Like we're gonna probably see some type of pullback or a complete reversal. I'm just moving my thing to break even because if price came anywhere near back here, I wouldn't even want to be in it anymore, anyways. Yeah. Ooh, what was that? Oh my god. It went down, but it like right before my stop, and I moved my stop, but I didn't get stopped out though. That was crazy. That's why we have stops in place, Max. That boy Max likes to trade with no stops. Yeah, so I mean, even with that move, like that kind of gives me more confidence because they just swept liquidity. So it's like they got I feel like they got people out of there that they wanted to get out of there. So hopefully now we should really see some movement up. But we got to be prepared to cut this trade though too. Yeah, so like I told y'all we had this 5 minute fair value gap. So price was, has the opportunity to go back there to get more liquidity. So we swept liquidity and like dove into there like pretty fast. So that kind of gives me, and we're leaving such a big wick. I'm feeling like this should be our move to the top side now. If we keep getting rejection from this point, I'm just gonna close the trade. Because another thing that I taught you guys, we have this 1 minute fair value gap that was right here, and then we had candles close and disrespected. So like price could just be coming back to tap into that, and then boom, we just kind of like continue selling off. And the way these candles are like printing that's kind of what it's telling me. This might be the highest it might want to go. I was expecting like higher prices, but sometimes the market won't give that to you. Excuse me. Sorry, bro. That was the perfect opportunity to to show you why you need to start using them though, because stuff like that will get you, man. Yeah. So this is a spot where like, you know, price action and bias kind of like butt heads because, you know, I told you guys before, once these fair value gaps are inverted, we're looking to take sales from them. But, you know, our overall trend that we've currently been in has been bullish. So it's like, you know, sometimes price action will fake you out. Like we'll do things to fake you out your position. So you kind of have to make the executive decision. All right, am I staying in this? And like, you know, and if you are staying in it, when are you getting out? Like what do you need to see to exit the trade? Right now, I don't think I've seen enough to exit the trade. Yeah, we had this spike down, but that's just, especially in NQ, that's kind of normal. But, you know, the body of this candle respected the 5-minute fair value gap, dug in there and respected it. So, I mean, I haven't, that's the only thing, this inverted fair value gap up here is the only confluence that I have that the market wants to reverse, and that it was in this 1-minute fair value gap. But other than that, I still want to see higher prices. You know, it's a gift and a curse sometimes, because sometimes when I'm supposed to close my trades, I don't close them because I think I'm having diamond hands. But it's the balance. That's why you got to read the charts. Like I was saying, the bias versus the price action, and that's gonna help you make your executive decision. Yeah, it might be time to get up out of this because this thing's coming back. See, this is what I didn't want to see. I'm gonna let it, because I got it at I still feel like I want to give it a little bit of room to breathe because the way this thing's wicking out. But if I lose the 260, like I'll put my stop right there, it'll be 260. But that's where I'm really willing to just like not be in the trade anymore. Sometimes you have to sit through it. Like sometimes you just got to sit through it because we have our analysis, we have our bias. Maybe we should have got out up here. Like maybe that should have been the real TP. Yeah, so we probably about to get stopped out on this one, but it's all good. I think more than anything, you guys got to see the thought process behind the trade and like what we look for. You know, this, it doesn't work every day. Like nothing is 100%. So you know you're gonna have your losing trades, but you guys understand the idea behind it, like what I'm looking for, like what you should be looking for, how to manage the trade. You know, when to get in, when to get in, when to get out. And if we did like from here go to our take profit, that'll just be another example of why you should hold on to your trades too. Like you'll see why it's hard for me to close my trades myself, because sometimes we'll get crazy pullbacks and then just continue in the direction that we're going. So like sometimes you have to sit through that if you want the real move. Exactly. Once you follow the process, you know, nothing is 100%. I follow my rules, so I can't even feel bad about the trade. That's the other thing, is because I read everything. I didn't get in too early. I mean, a little early, but I didn't get in too early. And I placed one trade. I didn't hop in and out. Um, I had my liquidity mapped out. I had everything mapped out. But yeah, so we got stopped out on that one. And remember, I told you on this 15-minute, this is what I didn't want to see. I didn't want to see this whole red candle engulf this previous candle, which is what happened. And then another thing, sometimes you don't want to move your stop too early, because if my stop was still down here, I could technically still be in the trade, but I didn't like how much that stop was costing me. Like I didn't want to get anywhere near that 1200. So that's another thing you got to look at. And then maybe I just got stopped out, and then the move is going to continue to happen. If you still had your stop in the right spot, you could still be in this trade. Because if you look at this 5-minute, like we're respecting this fair value gap, we could very much, you know, just keep pushing up. But we just got to let the candles print and just see what's going on. So yeah, so we're down 262. That's not bad. Exactly. Yeah, and you definitely want to keep your losers small. Like if you know how much you make, you know, in a day, you want to lose like a quarter or a half of that. Like you be willing to lose a quarter or a half of that. So if I'm making $1,000 a day, like I shouldn't be losing more than 500 in a day. So it's like that's the other thing that you're gonna battle with, is like when you see that you're down 500, are you gonna walk away from the computer? Like, are you gonna lock yourself out? Because that's what's really hard about trading. It's not even, you know, reading the charts and everything. It's just that management and risk management, and keeping your emotions in check, because that's what really gets you. And you'll just, because like right now I could have revenge trading and just be hopping in and out, but I'm not going to right now. If I see, you know, a setup and I feel like, okay, my move is still in play, then yeah, I'll hop back in, but I just got to give it time first. Because honestly, if you look at this, it looks like my move is still in play. Like we just came down to sweep some liquidity. Then even on the 5-minute, you know, the wick of this candle, we're respecting this 5-minute fair value gap, and we're getting some bullish energy back up. So this could be another opportunity for me to get back in. And the fact that I manage my risk so well, I can get back in. Because imagine if I just left my stop somewhere where I just got too heavy on my position, and that one trade like locked me out, or you know what I mean, I lost too much. I wouldn't be able to have the other opportunity. But yeah, keeping those losers small, that's how you really win. And if this goes and does everything I say, I still feel like I won, because I saw that. Like it's, you know, you guys heard me speak about it. Like this is what I'm expecting to happen. So if it does do that, that's a win for me too, because another day the same setup's gonna happen, and I'll be able to see it. All right, y'all. So, I mean, this price action was trash. Like, if you look at what was supposed to happen, and I mean, it is what it is. We kind of just got it's kind of just chopping right now. So a lot of times when we have times like this too, after lunch, like after 1:30, is really when we'll see like a real clear setup. Um, so I mean, I'm gonna stay on here for like 30 more minutes. Like if anybody has any questions, like now's the time. Let's go ahead and do that because I'm gonna get off at 11:30, 12 o'clock, and then I'll probably wait until after lunch to try and see if I could find another move. If y'all, I don't know, y'all let me know if y'all are gonna be on for after lunch to try and see if we could get an after lunch trade. And I'll come back on, but if not, I won't worry about it. But yeah, if anybody has any questions or anything, just let me know. I am gonna try and do the gold in the Asian and London market. I'm working on that. I just got to understand how gold moves for real. Gold's a little outside of my skill set right now. So if I take a little bit of time and like look at their charts, I definitely want to do that because I do want to do some after hour trading, like Asian and London market trading for sure. And yeah, just like a little recap of why we got in that trade. We had the Asia low, we had the London low. This is market open. So this honestly, this is something that I might have missed. So at the London or at our New York open, it looks like we might have came in here and swept this liquidity from this fair value gap right here. So that's why you see this wick up. We came and swept this liquidity. So that might have been the sweep that we were looking for. It might not have been, to the high or low of the Asian market. So this could have been the sweep and the real moves to the sell side. But again, that's kind of outside of what I was thinking. It's like we came and we took the London low, and I mean the Asia low and the London low. Then we aggressively pushed back into the range. In my eyes, that lets me know price wants to go higher and try and seek higher prices. So that's why we got into that trade, which the trade still technically could be valid because if you look, we're not really creating like really new lows. So we had no news today, so price could have just chopped around, just been chopping around for the day. It just could have been one of those things. But like I said, after lunch, we usually get like really good trades. Now for my bias for the day, like there's a couple ways you could kind of find the bias, but I really, to know if we're like bullish or whatever, we're really, sometimes I try to find my bias for the week and then I let it play out. So like, this is another reason I'm gonna tell you why I was thinking long. So if you guys know one of the videos I had the accumulation, manipulation, and distribution. So on a weekly basis, you can expect, a manipulation at some point. So if this right here, because we had Monday and we came and we made the low, in my eyes, this could be the low for the week that was made, this wick of this candle right here. So like in that accumulation video, I told you guys we have accumulation where price kind of like bounce around, or this day right here where we didn't even take either side could be accumulation. But you could look at those couple of candles as accumulation. Then we had a manipulation candle, which fakes people out thinking that we're going to sell off. And then all of this could be our distribution. So this is on a daily chart that I'm showing you because so when I say that, it's like that's my idea. That's going to be my idea for the rest of the week. It's like, okay, bet we accumulated before the market opened and the new week started, we manipulated, and now I want to see our distribution. So I have this daily fair value gap because this is like my overall target. Like I think price is going to come fill this gap however it wants to, either come 50% or just tap it or whatever. But I think this is the draw on liquidity for the week before the market really makes a huge move in either direction that it wants to make. So that's my idea going into it. Is like we had this accumulation and then boom, we had this manipulation leg. So in my eyes, that's the low of the week because the way candles print, right? The way the market moves. Let's do it like this. I'm I'm gonna try and draw something. This is gonna be an ugly drawing, but I want y'all to kind of understand. So, you know, so we accumulate, right? That's a bad example. So like we go here and just kind of just imagine what I'm saying. The market opens, boom, we shoot up, then we shoot down, and then that's terrible. Let me use something else. Okay. So what I'm explaining right now, right? So like I told you, this is like accumulation, manipulation, and then distribution, and then we come back to accumulation. So this is how every candle works. So like when a candle opens up, that's why you see the wicks, like this part, the manipulation and parts of the distribution. Like if you really think about it, this right here, this is a wick. Like that area when price does something like that, that's the wick of that candle. So we had the open, which is like the open of the body of the candle, right? Then we wick up, then we come down, we create a bottom wick, and then price comes back up and then consolidates. So if you just look at that anatomy of that candle, so you can look at that, you think about that anatomy on every single, time frame. So even on a bigger basis, that's how candles are formed. So that's why I'm thinking of this week. So this whole week, if you think about it, what I'm saying is like, okay, say this was Sunday when the markets open back up, and then boom, this is Monday. Monday was our manipulation leg. And then Tuesday, Wednesday, Thursday is our distribution. So we're selling off that day or buying in this instance, right? And then Friday comes, we get a pullback on Friday. That's the Friday. And then this is the weekend where we just accumulate again. So if you kind of think about, like when you think of it that way, that's how I kind of get my bias. I don't know if that makes sense. I'll try and make a better video on this, but if you want to look this up, it's called The Power of Three. There's videos out there called The Power of Three, and they'll give you a better explanation of that. But I did my best. But that's what I'm looking for when I'm looking for my bias. So like I said, we had our accumulation, we had our manipulation, and now I'm expecting like the next couple of days up until Friday to be bullish. And then we'll have some selling off maybe Friday, or we could continue to be bullish on Friday too if we have a really strong trend, end up having a strong trend. But that's my bias, at least for the day. And then so once I understand that, also that's when I go down and I'm looking at these different time frames or these different areas of liquidity, because it's like, okay, if I'm bullish, I want to see sell side be taken first. Because if you watch those videos, I say sell side is going to be taken first, and then we go for the opposite side. So if I'm bullish, I want to see price sell off first, get people off the track thinking that we're going one way. Then I want to see the manipulation happen, and I want to see aggressive price back in the direction that I'm expecting, and then that's when I want to get my entries, because that's what we pretty much saw. You see price come down, swept the lows, then these candles, really strong aggressive candles buying. So in my eyes, okay, bet price wants to go back higher. And then yeah, so, and the thing about it too is like when stuff like this happens, like it doesn't, just because it swept that low doesn't mean it had to happen right then and there or in the next hour, next 15 minutes. Like it could literally still chop like this until the last hour of the market being open, and then do the move that it wants to do. So, that's one reason why we try to trade during the New York session, just because there's so much volatility then. So it's like, more likely for the move to pan out. But when it doesn't, it just doesn't, when it is what it is. But did that answer your question, Max? I don't know. But that's kind of like how I get my bias on what I'm thinking. I think about the whole week instead of like a day by day type of thing. And you also want to find higher time frame like areas of liquidity, like on that daily, how I had the on this daily fair value gap. Like I know that this should be the draw on liquidity for the week at least, you know. You see, and we're already in a 50, I mean a weekly fair value gap right now. You know, maybe just a little bit of a push up the next 2 days and then just sell off, or we could just sell off from here. None of this stuff is 100%. You kind of have to like take the information and tweak it yourself. And just, you know, when you trade more, you're going to see things and things that work for you. Because there's other things you could be looking at too. Some people look at, you know, order blocks, breakaway gaps, breaker blocks. There's all types of stuff, but you got to, especially starting out, you want to pick something that you can see easily and just keep, you know, keep at that and keep building on that strategy, and you'll just get better over time. You'll be able to see things better over time. I don't know, this trade still looks valid, but I'm not getting back in. I'm not messing with it. Maybe after lunch or something, but and then I also did the liquidity video that's up there for YouTube, Max. I don't know if you saw that, but I uploaded those other two videos, the fair value gap and that entry model, but liquidity was supposed to be before both of them, and I didn't realize I didn't record that one yet. So I had to go back and record it. So it's kind of out of place, but just look up the liquidity video. Is in that boot camp thing. It's probably one of the last videos, but. And then today I'm gonna do a top-down analysis at pretty much during like the London session. I'm gonna come on and mark out my charts, and I'm gonna record that and put it up so you guys. So that's another way for you to kind of. I'll try to go through and explain my bias a little bit more in there. Yeah, that's what it's about. Is what do they call it? POP, uh, process over process, profits, process over profits. You want to focus on your process over the profits. Like, you know, I could be bent up about losing the $200 or not going my way, but again, like, follow my process. Like, there was nothing else that I could have done to make it maybe close my trade earlier, but that still wasn't even part of my process. Like, I had my TP set, I had my stop loss set. I'll adjust my stop loss, but I want at least, you know, the 1 hour return to come from my TP. And, you know, maybe I got stopped out too early right here too. I shouldn't have really moved my stop, maybe. You know, you see it happen to me too, but because you see we're kind of getting moved back into the direction, but I think for what it's worth, it was worth to lose the 200, like to manage it that way, than to sit through this chop for however long, because I would still be sitting in this trade, and I don't want to be sitting in a trade right now. Like, I would want to be done right now and come back after lunch, or just be done for the day. Yeah. That's what they always say. It was like, there's somebody out there who wish they only lost a couple hundred, or who wish they didn't even trade today. You know what I mean? That's how you kind of have to look at it. But yeah, I think that's it, guys. So I mean, if y'all are gonna be back on after lunch, I'll probably hop back on like 1:15, see what's going on. Y'all will get a notification to anybody that's subscribed. Make sure y'all subscribe and like the video for me, you know, so we can start getting some more people in here. But you know, we didn't lose too much today, but I hope you guys learned something at least. Like, you got to take something away from this. And yeah, but until next time, y'all, good luck. Hey, if y'all are down, man, lock it up. Don't lose too much money, man. Get up out of there. Go for a walk or something. Go do something else. Go hit the gym. But all right, y'all.